Good morning and welcome to today's edition of the London Session Open. Today is April 5th, 2019, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX. Normally we host this as a morning webinar, but I'm flying out to Barcelona today to meet the ATFX team for an event in Barcelona tomorrow at Hotel 10 Casanova. Starts early in the morning, I think about 9 a.m. and continues until about 7 p.m. So that's why we're not doing this live today. Now, before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk and we may lose all of our invested money as well. I'm going to share with you guys my view on the market, but of course, everybody's responsible themselves for their own trading accounts. So I'm doing this to support traders with an educational purpose as well. All right, let's kick off. Today is not your normal day. Today is NFP day, and the market projects an outcome of 175,000 new jobs, which would be really good because the last reading was just for 20. You can see here in the calendar how this was a major surprise. Like the reading in January was 311,000, and now it would drop down to 20. A lot of people say that this is because the shutdown of the U.S. government. So in essence, in January here, a lot of people had to take up a second job, and then when they reopened, the figures, these jobs were lost, and that's why the creation was just 20K. Now we have seen these sort of figures before. This is in 2016. This is in 2017. So it seems to be that at least every 12 months or so we have a very low growth. Now, what would be surprising if the number again sort of prints 20K, then that would, if we have 2 months like that, then that would be a strong warning that something is not right with the US economy. But I doubt that this is going to be the way it is. In fact, the last reading might revise upwards. And one of the reasons why I doubt that it's going to be like that, because if you look at something like the initial jobless claims, initial jobless claims is a weekly indicator, and if you look here, there's no stress here. The numbers are still relatively stable as they have been since 2018. The ADP figure, which was also published earlier this week, has less of a volatility, so it's less sort of random. It doesn't give you those crazy low readings. And here as well, we're dealing with overall a solid labor market growth. Again, we had a very nice growth here, 300,000 in January. Yes, that's true, 300,000. And then we had a bit of a decline here. But so you can see here that I think this one paints even a better state of the labor market in the US. And then if you look at the unemployment rate, which is the NFPs and employment rates, they are derived in two different ways, so it's not the same sample size. So here, if you look at the unemployment rate, it remains at very, very low levels. I mean, this is not an economy that is in crisis when the unemployment is at 3.7%. Also, wages are very strong. You can see here how average hourly earnings are solidly strong, and you can see here how the growth is at 3.4%. So really, really good data, a really good growth, especially given that inflation is not very high. So armed with that information, and also armed with the fact that the German economy is not doing too good, as I mentioned in that CNBC interview, which you can find on my Twitter, and also ATFX YouTube page, I'm saying that if we trade below 11,075, which is this level down here, and I think we could potentially have further weakness. If we treat this as a big rectangle, if we do something like this, we sort of narrow it down even, because this is definitely an oscillating pattern. It's just that it's not the most sort of, the levels are not clear cut, but you look in here from here to here, which sort of where the bulk of the move is, and let's assume that we had a break already here. So this itself is suggesting we could probably trade down to something like well, it would be 109.39. okay, now the next major low is down here at 108.57, so I think down there would not be that unsurprising. So but if we just go for this first level, Stop loss just goes above today's high. On a break to the downside, you're looking at risk reward ratio of almost 4 times. That's a very, very good risk reward ratio. Again, I would only do anything like this and trade anything like this on the numbers being stronger than expected. As well, full disclosure, because I'm gonna be on a plane, I'm flying out, I need to board at 12:15 and we are supposed to fly out at 1 p.m. London time. That means that I will actually miss the NFPs today. But if I wasn't flying out and I saw a break here, then this is something I potentially would have done. Now what you need to look at, you look at the calendar, you need to look at average hourly earnings. Does it deviate a lot? Like is it 2.5% or is it 3%? All right, that bit of a warning sign. What happened with the unemployment rate and what happened with the non-farm payrolls? You need to look at all of those 3 factors in conjunction, and then you look at something like maybe the euro. You definitely look at the euro dollar. You look at something like gold. Gold is in a massive head and shoulders, as you can see. So break to the downside. Again, both the euro dollar and gold confirming that's a good sign. So you need to look across the board really for price action. So that's sort of the NFP game plan. As for GBP USD, there's no real game plan except that I'm bullish about 129.52, and for now I'm just going to remain bullish above this level. I don't have a strong view. Labour and Tories are talking. That's good. Maybe they can be find something that suits everyone. Again, trend is bullish about 29.52. Then you have the price of gold, which we just discussed. You have a massive head and shoulders, left, right shoulder. Yesterday you had a false move. Sort of the moral of the story here, or what I was thinking when I saw this, because I had people talking and asking me about it, because I was myself looking to potentially short here, because the risk reward ratio is very good, about 5.24 times the risk on a break to the downside. Now, the idea here, why I didn't trade this yesterday, is that in markets like Eurodollar and gold, you don't typically have major breakouts just the day before the non-farm payrolls. You know, it's also like on the day of non-farm payrolls, there's very, very few people that are going to be very interested to take a big position just ahead of the non-farm payrolls. Okay, so with that in mind, I didn't take on this position, but it's looking really interesting. Again, head, left, right shoulder. As for crude oil prices, they're going down as we discussed over the last few days. As I've been saying, this makes perfect sense. The trend remains bullish, about 58.14. Here was the second target. First we said this was the first target, this was the second target. Then we can go down and then probably upwards again. But the S&P is looking good. We talked about buying down here. Trend remains bullish. I think it's going to like a psychological level like 2,900. But our best entries are on dips, not at these highs. As long as the non-farm payrolls are not very bad, then we should be okay. Another thing here as well that we need to bear in mind, something that a lot of people are not aware of, but is wage growth. So wage growth is strong, and if that figure starts to be at 4%, you know, at one point the narrative is gonna change. It's gonna the narrative is gonna be, look at those figures from non-farm payrolls. The wage growth is very strong. The Fed is gonna start to raise interest rates fast. If that were to happen, then you know, stock markets are probably not gonna continue to be so upbeat. But we're not there yet. But that's something to bear in mind, and something that will probably be talked about if wage growth continues to improve. So we're looking realistically maybe 6 months from now, maybe 12 months, if the numbers start to get really, really strong. As for the German DAX, beautiful head and shoulders, very bullish. This was the breakout here, and as long as you're above 11,637, I think the trend is going to be bullish. Might have a bit of a pullback, but then potentially upwards. And I think that's pretty much it. Let's provide you guys with a quick update on Ethereum. So this is Ethereum, which I spoke about. So the market moved down a bit, but still looks to recomplete. And I think if we have a close or a strong push about 168, I think that's going to be sort of the final blow when we probably head upwards. Ripple as well, it did have that. It did go down and up. So now I would, the original sort of trend funding level, stop level was at 31.63. I will now just place that here at 32.53. Okay, guys, this concludes today's market update. I'm gonna be in Barcelona today, as I mentioned. If you happen to be in the area, come tomorrow to Hotel 10, so H10 Hotel Casanova. We have an event. You just need to register it. Search for that. It's on, I think we call it Eventbrite. Let's see as well if I can find my own Twitter. I would need to log in. I haven't logged in yet. Here we go. So publish this on the 2nd. If you click here, this shows you more about the event. So it's an event with ATFX and Robot de Forex. It's free to enter. It's gonna start in 1 day and 8 hours. I'm gonna be there. I'm not necessarily gonna be speaking. I'm just gonna do a short little intro. But if you're there, you know, let's meet up and talk a bit. So starts tomorrow at 9 a.m. and then there's a lunch break, and then we continue in the afternoon. Okay, guys, thanks so much for watching, and thanks so much for watching this video as well. Don't forget to check out on YouTube. I did publish a recording. As you know, I used to I do these interviews with CNBC Arabia. If you go down in the bottom here, you can find the interview here. It's an interview I did yesterday. However, it's in English. It's behind the scenes, and I talk about the markets as well. So you can check that out. Don't forget to like the video. You can go down there. You can also just click on videos, and it's the latest one up here. Okay, guys, thanks so much for watching, and I'll see you guys on Monday. Thank you.